talking about shares of Cisco, which are down 10% in the last 2 days after issuing current quarterly guidance that was below what I was looking for and what Wall Street was looking for. Cisco cited slower demand from China, among other things, in wake of the trade dispute. But they did beat both the top and bottom lines handily. So we have a tale of two cities. The quarter that was just finished and the quarter that we're in. Chuck Robbins, Cisco CEO, welcome back to the show.
Hey, Jim. Nice to be here. Thanks for having me.
All right, Chuck, I know there was, to me, puzzlement in the sense that this was a blowout quarter, frankly, as you said, strong end to great year. But then very abruptly, you talked about this quarter really not shining at all. Maybe you can explain to our viewers how a juggernaut like Cisco could turn into a company that is really kind of fretting about this next quarter.
Yeah, well, Jim, first of all, I appreciate you acknowledging the great performance that our teams put forward last year, and particularly in Q4. And they really did a great job. We had a phenomenal year and a phenomenal quarter. As we look at what happened in the last quarter, we saw two things, really. We saw our service provider segment continue to be weak as many of those players contemplate 5G architectures and thinking about how they're going to build that out over the next few years. And then we did see some weakness in China. And I think Carl mentioned it earlier in the show. I think Kelly said on the call that we were down greater than 25% in China. And, and you made this point earlier, while it's a small part of our business, when it falls off that precipitously, it creates a challenge. Now, the rest of our business, if you look at all of our orders, which is the vast majority of our business is outside of service provider, those orders were up mid-single digits, with public sector up 13 and commercial up 7. So we still saw strength in other parts of the business. But during July, we felt a slight change in sort of the overall macro versus what we'd experienced in the prior months. And that just gave us a little caution, because when we finish our year, when we finish our quarter, we know how that feels. And it just felt a little different. So that just gave us a little caution.
Well, Chuck, also, there was a moment where you could hear a pin drop on the call where you described, again, only 3% of your business, but what the Chinese are doing when you want to bid for business. So why don't you fill us in on that?
Well, Jim, in China, I think as we have been operating there, clearly there's a lot of tension between the two countries. I've always said that the trade tensions and the tariffs can impact us in three ways. It can impact us on our business in China. We can have direct impact from the tariffs, or we can, obviously be impacted if it bleeds into the global macro environment. And we certainly saw an impact on our business in China this quarter. A lot of the state-owned enterprises, I think, where they have optionality, they're choosing local manufacturers. And, we're just being told in some cases that they're going to favor local vendors, and that's just the way it is right now. So we don't know if that's a short-term thing, a long-term thing. We're hoping that it's temporary, and once we get to some resolution, that, we'll gain more robust access there, but that's what we're experiencing right now.
Before I let Carl have the podium, let me just say you've got a gigantic buyback. Now, you put the limits on and about what you're going to spend, but this was a last quarter you spent a lot. Your stock's down 10% very quickly. If you were to be your corporate treasurer with a 3% yield, is this a good level to start coming in and buy?
Well, I think Kelly would tell you if she were here that we're going to be very opportunistic, meaning looking for opportunities where we think the stock is at reasonable price. So I'll leave that with them, and the team will do a great job as they always do.
Buybacks are an interesting point to jump off there, Chuck, because there has been some discussion of the pace of buyback growth this year. Slower than last year. Obviously, we're farther away from the tax cut. But if, in fact, margins or profitability are pinched in the second half, how less likely are you to want to play in the market?
Well, I think, Carl, what we talked about yesterday relative to our guidance, we actually took up our Q1 operating margins. We guided strong gross margins. So the health of our business is still very good. And again, as we think about the markets, look, we focus on what we can control. We're focused on our innovation. If you look at what we've built over the last few years, you look at the successful transition we've made relative to our software portfolio. We talked yesterday about the fact that 70% of our software business now is coming from subscriptions, and that we're on track with what we laid out at our financial analyst conference relative to the transition to the software and the content of the software. So those are the things we're focused on. Our teams are executing really well. Our portfolio is better than it ever has been. And, these short-term issues will come and go, but long-term, I feel very good about where we are.
All right, Chuck, I got to press you on this. There's a line in your conference call. You say, you continue to see strong performance with broad-based growth across the majority of our portfolios. Chuck, that just does not jive with a 0 to 2 growth pattern that you're predicting. It just doesn't. And I come back to a J.P. Morgan piece, which I think is excellent, that I'm sure you've seen, where this was regarded as being overly cautious guidance. Chuck, this is more cautious than I've seen you, and it makes me feel like maybe I'm too optimistic about the future of Cisco.
Well, Jim, if you think about it, we just came off a year where we grew revenue 7%, and we're talking about one quarter. So, as I look at my level of optimism about the next year, the next 2 years, the next 3 years, I feel very good about where we are. We're going to have these short-term blips. We have huge customers, and when they pause, we may see a short-term issue. But this doesn't change my outlook about where we are. It doesn't change my outlook about how I feel about what we've accomplished. And I remain very optimistic. And, we're not going to do anything crazy because we have a short-term blip in demand from a certain set of customers. We're going to keep executing the way we have been.
I wish you had said it like that on last night. I would not have felt like, holy cow, down 6. Now, here's something that I know we think alike. Okay, here's one that you mentioned it. Some slight early indications of some macro shift. Can we get a sense of what you think is the reason why that's occurring? Is it tariffs? Is it political division? Is it the Fed? Because I know that I have felt that July was pretty good, but maybe things are less rosy overseas or even in the United States?
Well, Jim, your show actually spends a great deal of time talking about all the dynamics that could be impacting the global macro. And I've said for the last year that I've been amazed at the resilience in the face of Brexit, in the face of other European political issues, in the face of the trade situation that we have. The Fed is another there's we've got, uncertainty that arose this week in Germany. And as Mohammed said earlier, Singapore, we've got the Argentinian issue. So there's a lot of things going on that are creating a very complicated environment. I'm not declaring that we have some major macro shift going on. All I'm suggesting is we saw some slight headwinds in July that we hadn't felt prior. So I don't know if this is a temporary thing or if it's a beginning of something bigger. But, we saw it, we called it, and it just didn't feel like the normal end of a year for us.
Well, certainly understandable. You have a panoply of business that's around the world, but I like your largest security company in the world, buried within Cisco, and I like the fact that you've got a great voice activation kind of Zoom business, WebEx. I think these are great secular themes, as is 5G. You did not discuss so much about a secular theme or any of the secular themes that could override short-term blips. Is that, again, because of caution? Because I think people should see through this 3% yield valley that you give them and recognize that 5G beckons, Internet of Things beckons, your Zoom, like your WebEx product beckons, security beckons, so maybe they should hold on.
Well, Jim, if you look at our portfolio today, our core networking business, our enterprise networking business is going through the biggest transition with our customers that we have in the history of the company. We have every product in that portfolio, which is our biggest business, that's actually going through a refresh at the same time. We've never had that before. We added more Catalyst 9000 customers last quarter than we've added in any prior quarter, and we're in the second inning of that transition. Our collaboration business is doing great. Our security business continues to perform in double-digit growth again. IoT's coming, 5G's coming. These are all things that's why over the long term, I'm very optimistic. And we're not going to get too wound up about these short-term situations. We feel very good about where we are and the opportunities ahead of us.
All right, Chuck, just want to go back to macro one more time. I know you go to the White House and you're very attuned to overseas. I know you travel too much, frankly. And I wanted to get your view whether there's anything that could change it. Rhetoric decline, less tweeting, a belief that businesses could be forced for change here if they were allowed to be more unfettered and governments would step back and being so interfering. This is, I believe, a man-made moment of negativity. Can the man-made moment of negativity be undone?
Well, I think that everything that we've accomplished over the last decade relative to the interdependencies that we've created around the world are super critical to how we solve this problem today. And that's what I think we're seeing as that unwinds. And Mohammed talked about it earlier. And what we need to do is we need to get some of these issues resolved. We just need clarity. You guys have said it. Markets hate uncertainty, and our customers don't like uncertainty. And so, however it's been created, I think it's important for us to get to the right outcome. Don't get me wrong. We need to get to the right outcome, and we need to get there as expeditiously as we can. And I know that's stating the obvious, but I think that that's just where we need to focus, and we need to try to get that done and hopefully not allow the political system or the political processes to impede our intent to get to that outcome as soon as we possibly can.
Well, excellent, Chuck. I don't think that is stating the obvious, unfortunately. I don't know how that happened, that it's not obvious anymore, but that's Chuck Robbins. He's the chairman and CEO of Cisco. Again, down 10%, I think, is an opportunity. Maybe I'm a little more bullish than Chuck. Thank you so much, Chuck. Good to talk to you.